The legacy world has spent centuries regulating and optimizing and figuring out how to answer the question who, how to adjudicate the question of who, the dispute resolution systems and the property rights systems and the transnational agreements. The cryptocurrency space doesn't. So how do I bring real-world assets? How do I build real-world businesses in a space that lacks a who? I have to invent one, a digital who. Horton heard the who. I need to have identity on the chain. So you have to have identity with privacy, because the minute you have who, you have to decide who gets to know.
Bitcoin's recent market volatility, influenced by global macroeconomic factors, such as the escalating Iran-Israel conflict, has sparked concerns over its short-term stability. Despite a notable outflow of more than $300 million from US-based spot Bitcoin exchange-traded funds in early October, there are growing expectations for a price rebound as confidence in the cryptocurrency's long-term potential remains strong. This shift highlights the urgent need for more secure and scalable blockchain platforms to accommodate increased demand. This is precisely the difficulty that Cardano's founder, Charles Hoskinson, is solving. According to Hoskinson, third-generation blockchain platforms must evolve beyond scalability issues to address governance, privacy, and identity verification concerns, paving the way for broader adoption. As Bitcoin's price increases, the need for enhanced blockchain infrastructure becomes even more critical. Hoskinson's vision of a digital who, leveraging fourth-generation solutions such as private smart contracts and digital identification, could unlock billions in real-world assets and bolster trust in the blockchain ecosystem. Today's reliance on trusted middlemen, which undermines decentralization, must be replaced with secure identity verification systems integrated directly into blockchain networks. As we bring you clips from Charles Hoskinson's speech, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
What Cardano is dealing with right now, how do you build a government? Because you're not dealing with a simple utility, digital gold, teleporting Bitcoin around. You're talking about a programmable system. So you have to upgrade that system. You have to evolve that system. You have to make that system better. Okay. So the third generation comes in, and there's tons of booths all around. You see them. And they talk about scalability and interoperability and governance. You have your SWEs. Congratulations on Circle. Missing anyone? You have your Aptos. You have all of these people, Algorand, Solana, and yes, Cardano. And we're all fighting, and we're in the middle part of the third generation. And it's exciting and it's fun, because every time you have a generation, you get a whole new scale of capabilities. When you have scalability, it means it's cheap to use the systems for millions of people. When you have interoperability, it means your systems talk to each other. You can truly build an internet of money. You can build an internet of finance. It's awesome. And when you have governance, it means you harness the wisdom and the capabilities of millions of people throughout the world, the wisdom of the crowds. Suddenly, the people building on your system are your product managers. The engineers building dApps and DeFi are the ones talking about how to improve the protocol and grow the protocol. The collective wisdom of this is worth billions of dollars of labor. And we get to harness all of that. We couldn't with the second generation. And we couldn't even possibly tackle the problems we're tackling in this industry, from DeFi to intellectual property and other things with Bitcoin. That's why everybody's trying to upgrade it. You'll hear lots of terms like real-world assets, okay, security tokens, DAOs, business on the blockchain, all these things. Why don't we have them? It's like the flying car. It's like fusion. It's always 5 years away. Don't worry. Trillions of dollars are waiting. They'll come into our industry. Why can't we get there? Because here's the problem. Blockchains are super awesome at public stuff. They're auditable, timestamped, transparent, immutable. Good, great. You put it there like a domain name service. You put something there like a financial transaction. Everybody in the world can see it, believe it. It has integrity. Awesome. But what about the private stuff? What do we do with that? Do you like running a business where all your HR is public? You like running a business where all the money in the cash registers is public? How many people want all their Google searches to be public? Show of hands. Nobody? What about Amazon purchases? What about your political preferences? What about who you voted for in the election? Turns out that privacy is kind of part of the deal. And every real-world application, asset, business, transnational agreement always has two sides, a public side and a private side. The public side, we do well, and we're starting to master the art of programming it and scaling it and getting it done. But the private side is still something that's not clear, and in practice, how we're solving it is the same way we've always solved it. You pick somebody you trust, you give them the information, and you hope to God they don't lie, steal, cheat, manipulate. So if you have a blockchain application with a private and a public side, and the private side is off-chain and centralized, do you have a decentralized application? No. That's the first challenge. The second challenge is in the legacy financial world, and frankly, the real world, you don't have this idea of transactions without identity. You don't have this idea of businesses and no identity, assets and no identity. When you see a plot of land, what's the first question you ask? Who owns that? When you see a business, who owns that? Who? Something happened. Who were the people involved? What's the story behind that? So where is this in crypto? We have accounts, we have UTXO, we have transactions, and we have metadata, but where's the identity primitive of these types of things?
Charles Hoskinson emphasized the difficulty of merging real-world assets and enterprises in the cryptocurrency space. He emphasized the importance of a digital who, a blockchain-based identity with privacy and selective disclosure. This concept is crucial in bridging the gap between the traditional financial world and blockchain technology, ensuring that individuals and businesses can maintain control over their data while participating in decentralized systems. The fragmented blockchain space promotes competition and perverse incentives. Charles Hoskinson stated that the fourth generation should encourage interoperability, reward cooperation, and benefit customers. This will liberate $1 trillion in real-world assets, allowing for secure medical records, sustainable supply networks, and on-chain financial markets. The industry may unite by making this technology available. Much like Satoshi Nakamoto's Bitcoin, let us watch more clips from Charles Hoskinson's speech.
The legacy world has spent centuries regulating and optimizing and figuring out how to answer the question who, how to adjudicate the question of who, the dispute resolution systems and the property rights systems and the transnational agreements. The cryptocurrency space doesn't. So how do I bring real-world assets? How do I build real-world businesses in a space that lacks a who? I have to invent one, a digital who. Horton heard the who. I need to have identity on the chain. So you have to have identity with privacy, because the minute you have who, you have to decide who gets to know, who gets to see, who gets to decide. You have to have this concept of selective disclosure. So the fourth generation, the generation that's going to merge the legacy and the Web3 world and bring billions of consumers in, really the two big pillars of this is, in addition to being scalable and interoperable and having good governance and programmability and decentralization, must have privacy, private smart contracts, and must have some concept of identity. The challenge is, unlike scalability, unlike interoperability, unlike decentralization, where there seems to be an obvious path of where to go and how to do that, more is better, cheaper transactions, faster transactions, and trade-offs. The same for privacy. When you look at privacy, what are we actually talking about? Like, to whom? What guarantees do you get? What's the portability of that? How do you disclose that? How much overhead is required? Is it private forever to the end of time? Is it private for a little while? Is it private within a certain security model? So this is the next generation as we talk about these things. But then there's also a meta problem in the blockchain space. We've gone from too few to too many. There's more than 40,000 blockchains. There's millions of assets all around. And we all have perverse incentives to hate each other, not pay attention to each other, dislike each other. Why? Because we have tokens. You have token A and token B and token C and token D, and you put your names in, and you go and talk to these people, and if the person owns the token, it is virtuous and good. And if it's competing against another token, that token is evil and bad. Bag holding. That's the world we live in. And guess what? You can never build an economy where people's financial incentives are at risk. People, no matter what their politics and beliefs are, will always default to their incentives. It's a reality of human nature. So then how can we build a space that has interoperability and everybody's working together and collaborating and it's good for the consumer if the system, by its very design, promotes, incentivizes, and rewards fragmentation? That's the fourth generation. It's the generation that brings us together. It's the generation that gives us identity. It's the generation that gives us our privacy and for the first time ever allows blockchains to keep a secret. And it's the generation that opens up the floodgates and allows us to finally have the trillions of dollars of real-world assets that are waiting on the sidelines that require these things to come into the cryptocurrency space. That is the last generation we need. Because at that point, everything is just iteration. This is what's going to bring ESG in with supply chains and measure the carbon of every business in the world. This is what's going to bring the financial markets in because you don't have to reveal your trading strategies to trade on chain. This is what's going to allow you to have DAOs that live 100% on chain because the DAOs, for the first time ever, can keep a secret. And thus, a real business can be on chain. And you know what? By giving it away to everybody, like Satoshi did with Bitcoin, just mine it if you want it, it means the whole industry, for the first time ever, has one thing that they can care about together and agree about.
According to Charles Hoskinson, third-generation blockchain platforms address difficult obstacles by expanding beyond Bitcoin's limits as a digital gold to construct programmable systems. Meanwhile, the recent outflow of over $300 million in funds from US-based Bitcoin ETFs comes after a significant inflow of funds into Bitcoin ETFs in September, which totaled $1.1 billion. Furthermore, the previous 3 weeks had unbroken inflows of $1.91 billion since September 13th. However, the increasing disagreement has sent Bitcoin's price to a weekly low of $60,047. Better than expected U.S. payroll figures on October 4th comforted the market, helping Bitcoin retake the $62,000 milestone. As a result, ETF products received $25.59 million in inflows that day. Despite this recovery, the 3-day outflow streak was not entirely neutralized. According to cryptocurrency expert Ali, Bitcoin miners have sold around $143 million since September. Ali warns that selling pressure may increase if Bitcoin falls below the short-term holders' realized price, now $63,000. This is the average price at which short-term investors purchased their Bitcoin. Immortal, a cryptocurrency analyst, believes the short-term aim should be slightly higher, at $64,000. If Bitcoin breaks over this major resistance level, it may herald the start of a strong bullish trend. Meanwhile, experts remain bullish on Bitcoin's long-term prospects, citing previous Q4 performance and anticipation of U.S. rate decreases. Despite short-term volatility, prices are expected to reach $72,000 or higher soon. What is the most significant challenge facing the widespread adoption of blockchain technology, and how can it be overcome? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.